There's something going on that nobody's talking about, but we really need to talk about it because there is a major pattern shift that is occurring right now and has been occurring just recently in global central banks deciding to move their gold holdings home. Typically, they will hold it at like a major depository like the Bank of England, but now they are bringing them home in a flight to safety. And then, in almost perfect harmony, the US dollar index falls below a key technical support level, making it even more clear what is most likely to unfold. I remember when the dollar index fell below a key level in July of 2007. I was with my family, I was with my siblings in a sibling retreat. And I'm telling you right now, it made me really nervous. And they were all telling me, oh, everything is great. The economy's the best it's ever been. You're just doom and gloom. And then, of course, what happened after that? The real crisis started to unfold. And make no mistake about it, the dollar died, the system died, the global financial system died. And now we're seeing a similar pattern with the dollar. Is this going to be a repeat? Are we now going to see, we're coming up to September, is there going to be a crisis that unfolds? Because 96% of central banks say that their safe haven asset is gold. They're getting ready for this one. Are you? They only want gold in their possession, physical gold. How about you? Let's uncover what's happening with the US dollar and break down the exact same strategies the banks are using to protect themselves as we speak. What I'm showing you now is from the most current report from the Bank for International Settlements. This is the central bank's central bank, okay? And what do they have? Well, the following table shows the principal exchange rate and prices used to translate balances in foreign currency and gold into SDRs. But what they're really saying is in currency into SDRs. So forget the other two, because isn't it interesting that they put gold into the rest of their currencies? The dollar, the euro, the yen, etc. And there's gold. So keep in mind that gold is the primary currency metal and has been for thousands of years. They may want you to think that it's nothing, that it's just tradition, but everything I'm going to show you today says just the opposite. So this is also from that report and how they use central banks, mind you, not just commercial banks, make money by trading currency derivatives, right? Now, prior to 2008, their derivative use was very, very minor. But after that crisis, it has exploded, as has general derivative use. So what do they have here? And by the way, the SDR is frankly the currency for those that haven't been watching me for a while. The SDR stands for Special Drawing Rights. It is the currency issued by the International Monetary Fund, the IMF. It is a basket of currencies, all those currencies there that you're looking at. But the SDR, I think, is most likely to become the reserve currency, world's reserve currency, because they can put every currency in the world into it and then translate it into a local currency. So you have a global currency and a local currency. And these are the notional amounts. But the two that I want to point out to specifically are currency and gold swaps and interest rate swaps. Everything else is well below those two. So this is how they control things and how they can generate extra money. And it's the total derivative financial instruments in central banks, not globally, just central banks. So you can see how they use it, how central banks use it to manipulate the visible price that you see of currencies and gold. Trading is used to manage price action, and they know gold is money. Clearly they do. All right. So one of the ways to value a currency is the spot gold market, and this is the graph that I show you all the time. This graph goes back to when we first went completely off a gold standard. And all it really does is reflect the trading, how they're managing the markets. It does not reflect the true fundamental value of an ounce of gold. They're taking advantage of it. You should too. But back in 1970 or prior to 1971, gold was fixed at $35 an ounce. Then, when they took us off the gold standard and they went on this perception management campaign for us to think that gold had basically no value, it's just a relic, even though it's used in every single sector of the global economy. But I want to point out the cup formation, which is a key accumulation pattern. When it broke out, how much it went up, right? Went up pretty substantially. Actually, 825 intraday. Then the second cup, remember Y2K and how everybody was all concerned, the problem with the computers? Interestingly enough, gold spot went down during that period of time, right? Crisis brewing. We don't want people going to gold. Let's push it down. Here's your cup formation, and here's the breakout. This was 2004. I remember it really, really well. Now here is the most current cup, and I'd like you to notice that every single time the whole trend evolves, the cup formation is larger and larger. Every cup. So, are we about to experience the ultimate breakout? Because a rising gold price indicates a failing fiat currency, and we're at the end. This was the beginning of that experiment when they took us, Nixon, severed those ties. But now we're at the end. That's why everything is so confusing and extreme, because we're at the end of this currency's life cycle. Don't trust what you see on Wall Street, because it's for their best interest, not yours. And in fact, Wall Street fund titans are betting on everything gaining against the dollar. And this is part of what's making me wonder if this isn't taking us back to 2007. Dollar to weaken as Fed nears end of interest rate hike cycle. Remember how much the dollar went up? Actually, let me go back there and show you. Right here, okay? When Nixon took us off the gold standard, right? This is when Paul Volcker ratcheted up interest rates to 21.5% intraday, ended up closing in like 18 something. But they lifted interest rates up, and so that attracted people to the dollar. That's why when the Fed is raising interest rates, you'll see spot gold decline, right? Because after all, interest is more important than what you can buy with the dollars and what you're earning from the interest. I hope you realize I'm being absolutely, completely facetious, okay? So that's what happens. So the dollar weakens as Fed nears the end of its interest rate hike cycle, only if other governments are continuing to raise the interest rates up. So it makes it appear, one currency against another, makes it appear, oh, the dollar's stronger, oh, the dollar is weaker. But it really doesn't matter. It matters what you can buy with it.